the Trump administration is an increase in volatility. And that really means it could be either really, really good or really, really bad. The range has gone from this wide to that wide. And it could be really, really good. It could be really, really bad. And when anybody with that much power starts talking like that, I'm out. I'll head for the exit.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 31st through April 7th, 2025, while supplies last. First this week, we feature 1 ounce Gold Britannia at just $59 over spot. Next, Silver Britannia are only $2.99 over spot. 1 10th ounce Platinum Britannia are just $29 over melt. And 1 10th ounce Gold Britannia are only $27 over melt. All of our specials this week are IRA eligible. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Clem Chambers, the CEO of ANewFN. We'll put a link to that in the description of this video. Clem, thank you so much for joining us today.
Great to be on. Great to be right. Sad to be right, really, but here we are.
And definitely, a lot of us have been expecting this market crash here. We're recording this Thursday. The Dow's down over 1,000 points, almost 1,500 points here. We're seeing pretty much markets across the board starting to roll over. It seems like having a big hit today after Trump talked about the tariffs and all of that yesterday. So your perspective on what's happening?
Well, ever since I was a little kid, they always said free trade was the way that you elevate the world. And, free trade is good. Tariffs are bad. And obviously that looked back to things like Smoot-Hawley or whatever it was called back in 1920, 1930, where basically meant that the Wall Street crash became the Great Depression. And the idea of economics is, one country's good at eggs and another country's good at omelets, and you have international trade, so everybody, does well. And that's the whole point about the market. Somebody's got too much gold, somebody's got too much risk. They swap the risk and gold, the transaction is made, and everybody's laughing. It's a win-win. And free trade is meant to be a win-win. And, when the big 800-pound gorilla of world trade says, no, we're going to have tariffs now. No. It's not surprising that everybody goes, oh no, run away. Oh no, it's the end of the world as we know it. Well, happily, at least for now, most people don't realize it's the end of the world as we know it. Certainly the end of the economic world as we know it. And therefore, they're not really running for the exit as fast as they're probably going to end up running over the next few days or a few weeks or a few months. Because, it's the thing, it's real. No one's going to turn it around. No one's going to say, let's not have any of this. And it's going to be, it's going to be globally economically damaging. And, you could make America great again by making everybody else worse off, for sure. If everybody's starving, the people with food are the ones that are rich. But it's a beggar thy neighbor tactic. And a lot of people are neighbors in this game. And, the markets don't like risk. They don't like bad news. They don't like instability. You get high valuations when everything's stable. So when you have instability, asset prices crater. And here we are. Asset prices are cratering. And, I think America's going to lose in net wealth in the stock market about the equivalent of 50% of the national debt. So it's not necessarily going to be good news for America. I think it's going to be bad news. But we will see. We will see. The 3D chess players know best. They think, the rest of the world should suffer. And, this kind of what goes around comes around, doesn't it?
Now, do you see any, turning this around? I know about a week and a half, 2 weeks ago, you wrote an article for Forbes saying that, you're looking for a market crash, but, that there are a lot of different factors to consider, and it's really uncertain what is ahead. Has your view changed at all regarding that? It seems like you're very bearish right now and pretty certain that we're headed towards a market crash.
Yeah, well, we're halfway there already, aren't we? And we're at sort of 12, 13% down. I haven't calculated it from the high. But really, there's only one question is it going to crash 25%? Is it going to really crash 30%? Is it going to really, really crash 50%? Is it going to really, 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 really crash 75%? And, pick your number. 75% was the NASDAQ crash of 2000, the Wall Street crash of 29. I can't really be too bearish and think, oh no, that's too bearish. Because it's not one instability. It's multiple instabilities. I mean, what's going to happen to the stock market when America invades Canada? I mean, it's not going to, is it? But I mean, the fact that you could even consider it a possibility is enough. Yeah. And, gold is going straight up because gold is for war. And, we're on the road, aren't we? I mean, J.D. Vance gave the world, sent a memo only a few weeks ago that World War III has started. And, you don't have to interpret it like that, but you don't need much of a degree in English comprehension to hear what he was really saying. And so, it's multiple levels of dire. I mean, you've got this tariff stuff, and I totally get it. I totally understand what they're trying to do. I understand where they're coming from. We're telling the Europeans that they've got to, deal with Russia while America deals with China. But how does that sound to you? That sounds pretty terrible to me. Tariffs, global conflict. And then you've got all this, we'll have Greenland, please. Yeah, this line on the map. We don't like, what's that line on the map doing there? We don't like that. I mean, any one of those three on their own is enough to crash the stock market. And you've got all three, and you've got them all intersecting, and you've got no end in sight of it. And that's, if you just look at Russia, that's bad news. If you look at China, that's not good news. And now you look at America. It's a trifecta of chaos, isn't it? And markets don't like that. They don't like that. Assets, your life expectancy correlates with the value of assets. The longer you're going to live, the more valuable assets are, right? You can just work it out. It's a discounted cash flow thing, right? So if you're going to live 30 years, your assets aren't really worth that much, are they? Because you're going to be not on the planet's surface pretty soon. The moment you push out life expectancy, the moment assets become more and more and more and more valuable because, people have more and more value within themselves, et cetera, et cetera. So longevity is one of the reasons why, PE ratios are no longer 7 like they were in 1920 when people lived to 49 in America and child mortality was 1 in 5. Yeah, we live in this day and age where PEs are 30 and there is no much in the way of child mortality. As human life becomes more valuable, so do assets. And you turn that around, you make things more dangerous. I mean, risk is just danger, right? You make things more dangerous. You make assets less valuable. And we're on that road now, aren't we? So what we might be going into is a good old-fashioned bear market, not what they call a bear market these days, which is sort of, it's gone down 25%. We're now in a bear market, which is, when they started saying that about 15 years ago, I couldn't stop myself laughing and crying at the same time. That's not what a bear market is. A bear market is a market that trends down. That's the direction it's going, is down. That's a bear market. And a bull market is a market that trends up. And we've had that for best part of 2 generations now, almost. Well, we could be going into the first bear market, that I can remember, really. I mean, certainly in my lifetime. I mean, you could say there's some bear markets in and around 70s. But since Reagan, it's been a bull market. There's been a bull market up with corrections down. Well, we could now be in the first bear market in living memory, where it's just going to go down and down and down. Oh, it's gone up, down and down and down and down. Oh, it's gone up, down and down and down. And of course, nobody but a historian like me, tin pot one at that, has ever been in a bear market. They don't even know what that is. Oh, buy the dip. Yeah, it's going to be great. Well, global conflict, worldwide tariffs, recession, depression, and total global instability, and everybody, elbows out and Iron Curtain down, what's it going to do to your PE ratios of 80 and your sales times 10 valuations? It's going to just absolutely devastate them, isn't it? Isn't it?
Now, internationally, how do you see that countries are reacting to this announcement and really confirmation that yes, tariffs are going to take effect here? In the UK, where you are, how is the government reacting, and how is the market reacting?
Well, if an old friend of yours came around your house and started smashing it up with a sledgehammer, how would you feel? I mean, the point is, there's statesmanship used to be a thing, right? And all statesman's gone. Anything that even looks even slightly like statesmanship is gone. Yeah? And you've got people making random statements and making random claims and doing random things that belong more to the Middle Ages. I mean, look at that map. There's a bit poking out there. We'll have that. I mean, that's the sort of thing they used to say in the 17th century. Why Canada? Why have you got a straight line as a border? That can't be right. Can we be a bit more? Can we have it? Can you be one of? You don't. I mean, what movie did that come out of? I mean, you in global statesmanship, global politics, you don't talk like that. Even if you thought like that, you don't talk like that. Oh, we'll have Greenland now, please. So that's like it's such a shocking thing that people aren't really prepared to take it as humor. I mean, look, Mark Carney is about as smooth an operator as you can get. And listen to what he's saying. He's like, almost declaring war. Elbows out. What's that mean? You got to go around and elbow an American now. And, and Europe, I mean, Europe is it's the biggest favor that's ever happened to Europe, because Europe will now be a superpower, and it will be the superpower. It's 550 million people in Europe, and they all are per head have roughly the same GDP. I think it's actually higher than America. So it will outnumber and outgun America, which is, America's tried to have hegemony since the Second World War by making Europe dependent on it. Look, if we run the army, they haven't really got much of a say, have they? They'll have to be our friend, and they'll be on our side, and we'll fight the communists, and everything will be great. And the American soldiers aren't there because America didn't think it was in their interest. It's to make Europe dependent. Well, Europe's not going to be dependent now. That cord is cut. You can't go snippety snip and type, oh, sorry, I didn't mean it, type back again. This is global strategy here. And, baby and the bathwater's got thrown out here. And Europe will be the global superpower now. And, the damage, however long it's going to be being wreaked, will not be repaired easily, because, once somebody's kicked your legs out from under you, it's hard to trust them again, isn't it? And what's worse, the thing that nobody's noticed. Okay, so there's this waste and theft and fraud and all that stuff in the American government. Let's call it, must rate this is $2 trillion. Let's say it's what? Okay, where's that $1 trillion going? It's going into the economy. Doesn't matter, it's going to crypto bros with tattoos up to their ears and with long beards going to Vegas. It's still going around the economy. In fact, it's probably going around faster that way than if it wasn't spent. That $1 trillion, if they take that out of the budget, that's not going into the economy. That's $1 trillion of cash flow that American economy is not gonna have, right? It's not gonna be there. So when some, fraudster who's got his social security fraud system going goes into a bar and doesn't spend up $500 on a bottle of champagne, that bar ain't gonna make it. That's how economics work. That's why printing money stimulates the economy. Well, they're about to pull out in addition to jacking up prices with all these tariffs. So prices go up, people's money's not going up. People's income's not going to be going up, not in the short or medium term, certainly not in the short term. And then they're going to yank $1 trillion out of the cash flow of the economy. So $1 trillion is coming out, which is what? There's $3 a billion in population. So it's $3,000 a head is coming out of the cash flow of America. So people are going to be $3,000 worse off because that money's not going to be flushing around. It's not going to go into the supermarket. It's not going to go into Vegas. It's not going to go wherever that money's going. It's just not going to be going there. So you've got prices going up. You've got income going down, you're going to get a recession. Like there's, it's not really going to be one. It's going to be a depression. Economic depression, global instability, geopolitical chaos. Oh, well, stock market, it's not going to crash, is it? No, it's going to stay up. So it's just a question of how deep it's going to be. How deep? Because it's at least until the midterms. And maybe when everybody goes, hold on a minute, I used to have a portfolio and now it's gone. Oh, whose fault is that? Oh, it's that guy's fault. Oh, okay, voting the Democrats again. That really is the only limiting factor, the only buffer for this runaway train. And so if the Republicans don't lose the House and the Senate in 18 months' time, it's going to be 4 years of this. And who knows where it's going to be then. Well, gold's telling you, utter chaos. Gold is telling you where we're going to be in 4 years. Utter chaos. And it tells you the trend. Gold is going straight up. Absolutely straight up. And that's why it's going absolutely straight up.
It's the first time I've heard that perspective with respect to, Europe maybe, paying more for its own military, right? Then that actually weakens U.S. hegemony. I think that's very interesting. Yeah. And I guess, how does that impact the dollar in that regard?
Well, I mean, you might lose your dollar hegemony, aren't you? Nothing wrong with the euro. Nothing wrong with the euro. I mean, it's got stable government. You should see the lady that's the president talk. She goes, oh, this is all a bit difficult, It's all a bit difficult. Oh, yes, well, but we're Europe and we have values and carry on. Very impressive. Very impressive. Actually can string a sentence that's coherent together. Yeah. Very, very, very good. And Macron has gone full Napoleon, and Europe is 550 million, highly educated, unlike a lot of Americans, and very rich. Yeah. So, all this nonsense about, Europe being slow and stupid, that actually is American PR. That is actually what America puts out there to say that, Europe can be, written off. That's what it's not a mistake. I mean, it's a mistake for America or American hegemony. Okay. Because I mean, the people on the other side would say, look, we're going to cut the amount the government's going to spend. We're going to get them out of the way. We're going to put up these tariff barriers and rebuild manufacturing base in America. We will be a powerhouse again. We'll stop making everybody else rich. You make everyone else rich to stop them going to war with you. So that's quite a good strategy if you want peace, and peace is good and war is bad. Okay, but let's forget all that. We're macho, and we're going to bring it all back to America. We're going to put these tariff barriers up. Rebuild America's industrial superpower that it was before we let it all run away. And that's it. We don't care about anybody else. Well, that's all well and good, because you really got to cut that government budget right back. Yeah. So that you don't need people to be buying your treasury bonds to support your deficit. The deficit is all about pushing your dollars out into the world to have yourself as the international currency. And that comes with a very, very good bonus, because you can manufacture money in the same way as you can dig gold out of the mountain, but you don't need a mountain. You just need trees and paper and some ink. So manufacturing money that the world uses is a very good business model. And America's been in that business since the Second World War. If it loses that, it doesn't matter if there's a fiscal, if there's a trade balance, positive trade balance, and a positive fiscal balance, even, God forbid, that ever a thing, right? So that's a strategy. But to do that, you have to dismantle the whole system as we know it. You have to dismantle your government. You have to dismantle world trade. And you try to all do it at once. That's not a sign of competence. You might be able to get away with it we're going to do this now. We'll have Greenland now. We'll have Canada now. Maybe leave that till later. We'll do the tariffs now. Oh, okay, we've done that. Now we're going to upset everybody with something else. Oh, and now we're going to blow up our public sector. You might be able to do that over 4 years, but to do it in 4 weeks, well, you're not going to have a stock market at the end of that.
And you mentioned how gold is reacting to all this, going straight up. We have, over the last couple of days, seen that gold seems to be tracking the stock market just slightly, where today, as we record this on Thursday, a huge sell-off overnight there. So your perspective on do you really think that, I guess, the long-term trend is going to be gold up, stock market down, or what do you make of this correlation over?
I've made a bit of an error because I've got large quantities of precious metal. And of course, it's dollar denominated, isn't it? Dollar. And I'm not dollar denominated, but I'm sufficiently pessimistic to write that off, because it's going to be everybody else buying it, not necessarily just the Americans. So it will go up. Even if you're dollar denominated, you're going to do even better in a sense than somebody who's not dollar denominated, who's watching the dollar go that way. But, you know, I've got a diversified portfolio of currency, so I'm going to lose it somewhere. But it's just like, oh no, balloon's gone up, gold's gone down in euros. Oh no. But anyway, that will wash out. That, you know, if you're, I'm not a trader. I mean, I used to, but my stomach lining went, so I've got to take a longer, more relaxed view on these matters. But look, gold is for war. I mean, you can't go around and tell Canada it's got a straight border, and that's offensive to you, and expect people not to worry about your real enemies. I mean, you know, he's swinging the baseball bat at Iran. He's dropped a few clogs on the Hutus, or not Hutus, they're the Africans, aren't they? Houthis. And, you know, what next? What next? I mean, Mr. Vance has gone out and said, yeah, America's going to have a conflict with China. You better get on with fixing Russia on your own. I mean, what does that do? What does that do to security of the world? And, you know, gold is for war. And you've got to have it. If to fight a war, you've got to have gold. That's a country that doesn't have gold, can't really fight a war. So you've got to have it, because it's the international currency of war. It's not good for anything else, not even for teeth anymore. You know, maybe Rolexes, but there won't be buying many of them going forward at this rate. But it is the currency for war, and that's why China's been buying it. You know, it's got these bridges on legs. Taiwan is mainly hills, so it's mainly cliffs, right? So they've got like 3 beaches they can come ashore on, and obviously that's not going to work out very well. So they built these ships on legs, like War of the Worlds fighting machines that can go up and elevate up onto cliff tops. And of course, America is up the creek without a paddle if China takes Taiwan, because all their chips are made there, all their AI chips. And of course, the future of global dominance is going to be the future of AI dominance. So you can't have the Chinese cut off your chips now, can you? No. So, you know, they got the memo a few weeks ago. Yeah, we don't like this NATO thing. Why are we defending you? Get on with it. Which actually means we can't fight a global war on 2 fronts. We have to take on China, and that's going to take our attention. You get on with this Russian stuff. Yeah. And, you know, what does that tell you? I mean, you just listen to a speech and say that's not what you can hear. Well, what does that do to the gold price? What does that do to what's China thinking? I think we need some more of that gold. We're mining a lot, but I think we need more, please. More, please. And what anybody at all in such a conflict, or even close to a conflict, or even round the corner from a conflict, where isn't round the corner these days? Yeah? Japan has to buy it. Indonesia has to buy it. Malaysia has to buy it. India has to buy it. Everybody has to buy gold, because gold is bullets. And, you know, the moment, if you see gold go down in a lump for no apparent reason, start trending down, they're all going to have a hug-a-thon, aren't they? All going to go to the UN and throw a party and say we didn't mean it. But I don't think that's going to happen, do you?
I mean, what we've been seeing, as you mentioned, gold just going, you know, over the long term here. I mean, even if you just look at 12 months, you know, gold up 50%, that definitely is sending us a signal that, you know, times are not secure. And as you mentioned, gold is for war. So it seems to be tough times ahead. So for those, I guess, in more conventional investments, what do you say to them now? You know, what percentage should people maybe have in gold? And then also, what other assets are you looking at as well that will survive the storm?
Well, you know, wars start at the top. So wars start at the thought level. Okay, so ideas, religions, yeah, and that's where the wars start. They start with people's ideologies, and then they move down into trade wars. So, you know, you've got I don't agree with what you believe in. Yeah, and everybody argues and nobody dies. Or not often anyway. And then you go down into trade wars. And again, you know, people just go, oh, we have tariffs and mucking about and you can't sell this here and all that stuff, right? And then it gets a little bit more argy-bargy. Well, pretty soon, you're down into land wars, aren't you? That's the pyramid, inverted pyramid. When we were cavemen, we didn't have trade wars to fight. We didn't have ideological wars to fight. We fought over land and food. Yeah. And as we got smarter and clever and more refined, so it tended to move up into trade wars and then into ideological wars. But, the moment you put too much pressure at one level, it goes down to the level below. And it's just a question of whether it goes from a trade war into a cold war, into a hot war. Yeah. But I can only say what I've done, not what I should say other people should do, because they have to look at their circumstances, first of all. And I'm out. The only thing I'm really in is in gold. Everything else is cash, because, hopefully a crash like this is short. But I really don't see the end of the tunnel. And if I did see a bright light, it might be the train coming the other way. So it's really I'm not able to plot that out. But traditionally, and you can look this up. You can look out what did well in the Second World War, what does bad in the Second World War. Ultimately, not many things in a bad time come out the other end even stronger, because they tend to do well in that period, and then when the period changes, they can't adapt. Okay, but during a conflict, agriculture works. Yeah, steel works. Steel is tanks in it. Yeah, and precious metal works. So you should look and work, and defense stocks work, obviously. Now, interestingly enough, a lot of American defense stocks came straight down when Trump got in, right? And then as soon as France spoke, all the defense stocks in Europe went like that. So obviously the Americans knew that they were going to do this pulling out of NATO thing, or, the next worst thing to putting out of NATO, and that people weren't going to be buying their planes anymore because they didn't like the kill switch in them. They have to make their own planes and own tanks and own missiles and own shells, because, you couldn't rely on your ally to provide them or let you use them anymore. Yeah. So the moment Trump got in, all those stocks went like that. And as soon as France spoke, all the European defense stocks went like that. So this stuff happens before you know about it. That's the thing to realize. So you have to have a medium to long-term picture in your head that you're clear on to be able to act, because the actual things that occur when they have that meeting go, right, we're going to do that. No, next Wednesday. No, let's not do it at all. All that stuff that goes on, you'll never see that. And when they say, no, they're not going to do it, the market will do that. When they say, oh, we are going to do it, it'll do that. But overall, you have to be right about the middle picture, middle to long-term picture, and position for that. So, for example, I've just lost a reasonable amount of money today in platinum and palladium, right? Because they're the catalysts in petrol engines and diesel engines. And you don't fight a war with Teslas, do you? You've got to have things that burn diesel and gasoline. And they're going to need cat converters, and they're going to need platinum and palladium and all that good stuff. And they only make 180 tons a year of platinum. 180 tons. That's like a trunk full of it. Every year, 180 tons, that's zero. And gold's 3,000 tons. So they don't make any of this stuff, tiny amounts. And so I'm positioned for, increasing geopolitical stress, because China ain't going to be putting lipo batteries in their tanks, are they? They're going to be burning gasoline and diesel and those sort of things fit in with the hydrocarbon industries that were going to be made orphans 2 years ago and now are going to be absolutely back in fashion. So energy, banks, funnily enough, do well in these sort of times. Banks, what do badly is luxury. Louis Vuitton handbags at $4,000, straight out the window. Yeah, travel, you don't go on holiday to Okinawa, do you? Et cetera, et cetera. There's a whole load of things that don't do well in conflict or stressful situations. But banks, steel, defense, agriculture. If you're going to be in stocks, they're the places to be. And I've got a few there just because I can't bear to have no stocks at all. And people that are defense suppliers that people don't realize as defense suppliers. Because then suddenly they just start scratching around for defense suppliers and they go, oh, I didn't know they did that. Oh, I'll have some of that. But pretty much everything else is going to be, the techs are going to get absolutely crushed. Because they've got such incredible valuations. that those valuations can only be kept aloft by peace and money flow. And money flows, that's what's going to bring gold down in the short term. There's going to be so many people running for the exits and going to cash, that cash is going to drain out the market, and that'll pull everything down in the short term. And then once that settles, there'll be a bifurcation between the winners and losers.
You mentioned platinum and palladium, and it still shocks me how platinum is a third of gold's price right now. So you're saying that right now you think it's a buy given, platinum's use in war?
Well, if you want to play while Rome burns, then you try to pick out the winners, while the lava's raining down on you. And to me, precious metals is a bit of a no-brainer. And palladium, I mean, it can quadruple very easily. It's a very, very fragile commodity. And I think it might have even been $4,000 not too long ago. So 4 times the current price. And the reason it's so suppressed is that everyone's going electric, and all those cat converters are going to get ground up, put in a can, shipped to China to be refined. Well, maybe that's not going to be happening anymore. And, the thing about this is the big theme, and it has been a big theme up to now, but for slightly different reasons, is AI equals pure energy. To make AI, you have to burn energy. That's it. It's like crypto on crack. Yeah. The things that do the AI training, not the playing, but the actual training of all the data, and which you can spend 100 million on energy to make that model, is coming down in price, but that gives you an idea of how much electricity that is. Yeah. AI equals energy. Intelligence equals energy. Right? Now, that sounds fine until you realize there's no second place in AI. If I got more AI than you, you're toast. You're absolute toast. I will dominate you. I'll take everything because I'm smarter than you. So you're like my dog. You got no hope against me because I got more intelligence than you. You're completely toast, aren't you? There's no second place. No second place. And therefore there's no limit to the demand if you're China and you're America, or even if you're Europe and you're America. The one that comes number 2 in the AI race, that's it. Forget it. Go home, They'll put you on a reservation. So there's no second place in AI. Well, AI is energy. So there's an infinite demand for energy. All this global climate change stuff, that's all dead. Because they'll be boiling the oceans to be number 1. Absolutely boiling the oceans. Now there's global conflict. Oh, joy. And you're going to want all your equipment running on AI, aren't you? Because you better not have no AI when the other guy's guns got it. Yeah. So there's no limit to how much energy is going to be demanded. So there's no limit to energy demand. So you can forget writing off hydrocarbons as an orphan energy. Well, you can get your palladium cat converter there just to make it slightly more damaging. Now you only got 180 tons of it coming out of the ground every year. So that's at some point it's just going to go, N.
Are you more bullish on platinum or palladium at the moment?
Oh, I don't care. I've only got a couple of crystal balls. I don't know which ones are going to go how far. But I might be completely wrong. Now, the point is, I'm positioned in this helter-skelter situation that we find ourselves in, and you've got to try to pick winners or go to cash, and then work out what the hell you're going to do with it. Because if it all goes belly up, that's going to get shredded by inflation. What's America going to do when those tariffs put the prices up? And, actually it's balancing because it's going to be stagflation maybe. Maybe the lack of money coming into the system because of cutbacks in government spending will counteract that, maybe. Or maybe they'll end up, because, okay, I'm the American government and I take $1,000 and I waste it. I just give a load of people mobile phones, okay? I buy mobile phones off somebody and I give them away. I just fritter it on something ridiculous. People counting trees. America spends 100 million every year counting trees, okay? That seems like a bit of a waste to me. Let's use that as an example, okay? So I give out 100 million pounds to tree counters. Well, they spend it, don't they? And also they pay tax. So for half of that's coming back. Well, no, I don't spend it. I don't get half of it back, do I? And I don't get the 1.3 multiplier of it on the economy. So I don't get whatever, nearly half of it back on the 0.3 either. So I don't get 0.6 of it back anyway. I don't get any of it. So my tax take goes, well, what happens to my deficit then? Oh, funnily enough, my deficit doesn't go down. It stays the same. Oh, what are you going to do now then? Well, I'm going to have to carry on printing money. But economic activity's dropped. Now I'm printing money. Well, that's inflationary, isn't it? So you've got to be able to balance your fiscal deficit, or get your fiscal back to zero. And that's very difficult when you're cutting off everyone's money supply, which you then tax back again. And then you get your balance of payments back together again. Yeah, which has always been 500 billion in the wrong way round. So you've got to do these tariffs, which put the prices up, which means people got less to spend on actual things, and they're paying this kind of stealth tax. Are you actually gonna have a fiscal? Are you gonna have happiness and joy? Clinton, he had a fiscal surplus because the economy was so strong, money was flowing in from every corner. Yeah. Well, obviously the politicians found ways of blowing that, but nonetheless, you don't tend to get fiscal surpluses when you've got a recession. And if you jack up prices through tariffs and you cut down, people's income by having austerity, really deep austerity, 15% austerity, and your stock market, which way is it going? That's all you have to know, All you have to know is which way is the market going. Doesn't matter how far, just the direction. Yeah? And if it's going down, very difficult to make money. If it's going up, very easy, right? As most people have learned over the last 20 years. But, it's about to get very, 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 yesterday, very spicy. I wrote on Twitter, X. You can check me out on X if you dare. On the 4th of March, I said, Trump crash, ? That was rhetorical, of course. That's the 4th of March. And here we are.
Will be interesting times ahead. People can follow you on Forbes, on also X, and anewfn.com. We'll put links in the description to all of that. Any last thoughts before we let you go? And tell us a bit about your work, Clem.
I think people say, what should I do? What should I do? The first thing to do is start with the obvious and look at your portfolio. And if you see anything, you go, well, I forgot that. What's that doing there? I can't remember why I bought that. Just do some housekeeping, dust down your investments, and anything you can't work out why you've got it, just turn it into cash. And then if you can't relax, just sell down until you can relax. Don't be in a hurry. Don't do it in a frenzy. Just go. If you think it's going down, that's what you should do. If you think it's going to buy the dip situation, why not? As long as you're comfortable with it, you should follow your comfort with investments. Because the last thing in the world you want to do is be waking up at 3 a.m. to see what the pixel's doing on the screen. Yeah. So you should get yourself in a situation of comfort, because these are uncomfortable times. And if you want to make good decisions, you want to be relaxed. You don't want to be, bouncing up and down on your chair. I mean, I was out weeks ago because, moment Mr. Vance spake, I went, oh no, that's not good. And I was really up to that point. I was on another show and I said, look, it's the Trump administration is an increase in volatility. And that really means it could be either really, really good or really, really bad. The range has gone from this wide to that wide. And it could be really, really good. It could be really, really bad. And when anybody with that much power starts talking like that, I'm out. I'll head for the exit.
Clem, we really appreciate your time as always. Again, links to your work in the description of this video. Thank you so much, and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 31st through April 7th, 2025, while supplies last. First this week, we feature 1 ounce Gold Britannia at just $59 over spot. Next, Silver Britannia are only $2.99 over spot. 1 10th ounce Platinum Britannia are just $29 over melt. And 1 10th ounce Gold Britannia are only $27 over melt. All of our specials this week are IRA eligible. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.